Hello everyone, I hope you all had a fantastic weekend. Today we're having a look at the European energy markets for the week starting 10th of June 2024. And as you can see, I'm working with some brand new charts. So this is Workspace by Refinitiv, and they are sponsoring the chartings for Clever Markets. Alright, so you might have also noticed that there are some major upgrades on the dashboard. There's a lot of new bells and whistles, and you did receive a few details on those last week in an email. And if you have any more questions, please do let me know. It's important to me that you have a seamless experience, so that's exactly what I'm here for. Please do let me know if you have any questions for me. Also, the Monday video will change, so I am focusing only on the key markets here instead of going through every single market in existence. So of course we'll always start with the TTF, we'll then have a look at carbon, and then depending on what's important, we have a look at maybe the TTF front season, German power, Brent. But please do let me know what is important to you, and I will try to include it for the next time. Also, if you haven't done so already, please make sure that you are signed up for the Wednesday Market Huddle. So we are trying something new. It is a weekly webinar with all Clever Markets clients in one meeting, and there you can ask all the questions that are important to you for the week. What's important to me is that we have a little bit more time to talk about everything, so do send in your questions as well, and I will answer them during the meeting. But it's really important that you send in the questions beforehand as well. Of course, you can ask live. Okay, let's get started. TTF front month. What has happened? What a week. Okay, as always, we start with the weekly chart, and here we can see that the market did post a new shooting star candle, and shooting stars are usually bearish candles, and shooting stars are small red bodies, and then you have a wick that is at least twice as long as the body itself. Some books say 3 times as well. And you can see, zooming out, what is actually happening here. So we had this downtrend, we are correcting higher, and we are finding resistance exactly at a 38.2% FIB retracement. So this is a good level to retrace from, essentially. It means we only had like a shallow correction, in the grand scheme of things, this would be a shallow correction comparing to the price at the 56, of course. So what will happen next? Well, in order to confirm the bearish potential of the shooting star, because right now it's just tentative, it's not really valid, nothing is confirmed, we need a break below it at 3270. And once we get a weekly close below that level, then we could see some more losses. How deep could it then go? Well, probably I would remove these FIB retracements, and maybe I would start working with FIB extensions that retrace, that continue this down leg, counter move, and then further down. So we'll have a look at that as it happens, because to be honest, I am not entirely sure that the price can decline to single-digit pricing at all, so that wouldn't make much sense. Also, the price probably would go into the negatives, so I would be very careful with working with FIB extensions. To be honest, maybe I'm not even putting them on. So I feel that the 22.32 is an important support level. It's not going to be reached anytime soon. I am still near-term bullish anyway, yeah, but be aware that we could retrace a little bit lower. Okay, so let's have a look at the daily chart, because here we have been working with this really shallow double top. Yes, I know it is very shallow, but the sentiment still remains the same, right? Even if we don't call it a neckline, a double top, the idea is that the market tried twice to push higher and failed, and now the market is hovering around this neckline at 3205, where we are finding a lot of support. So what can happen here? So first of all, maybe at the start of this week, a little bit sideways, and then we could make it lower. I believe that a bearish resolution of this double top, even though it's very tiny, is most likely, and that is simply because I can see that the momentum has topped out, and I also see that the stochastic is pushing lower. We see that trend tools have been edging lower a little bit. No bearish signal though yet. Once again, zooming out, it becomes clear that whatever is happening here is probably just a correction in the underlying uptrend, because maybe it is just turning out to be one of these bearish moves here. So nothing to worry about now. So I say we could hit like 30.7 or wherever, at what angle we hit the supporting trend line. And from there, we have to reassess the situation. Now, here's the thing. What happens if this level holds, 33.05? Are the bulls in charge then? No, I don't think so. If anything, for now, for the daily charts, for the near term, next couple of weeks, I believe if anything, that would just turn the market into a sideways range between 33.05 and 36.25. All right, on the intraday chart, now you are noticing that I am looking from here on out only at the hourly chart, no more 15 minutes, because the hourly chart is a little bit better at identifying the levels that are important for the entire day. Zooming out on the hourly chart, we can see that overall the market is swinging in an ascending channel. So that is kind of interesting, right? And we have bottomed out at the end of last week on Friday. And now two things can happen, or maybe a few more actually. So one opportunity would be for the market to push higher. So I have put on these Fibonacci retracement levels here, and a move above the 23.6% Fib retracement at 34.12 would mean that the market is actually kicking off an up leg. Shallow up legs maybe only go to 35, yeah, and deeper up legs, deeper corrections can go all the way to the 61.8% Fib, maybe at 36.41. So you can see what would that mean for the daily chart, right? So if we actually recover higher, then that would simply mean a little bit of a bounce of that daily chart's neckline, and there is a chance for us to start pushing or swinging higher and then sideways on the daily chart. So that's why I'm keeping an eye on the daily channel if the channel is maintained. However, another opportunity for the market is that we will push below the trough here at 32.7, and then we could easily make it to test the trend line support. And if that was to break, then the neckline on the daily chart would likely also be broken, or it would be broken, and then the market would simply continue lower overall, and we could reach on the daily chart the channel support here as well, near, what did we say, 30.7 potentially. So that's why it is so important to keep an eye on the hourly chart today, because it will tell us if or not the double top will be triggered, and then this moves down, that will tell us if the weekly chart's shooting star will also work out. All right, that is all for the TTF front month.